Hi everyone, welcome back to the Navigate Credit Union Broadcast Center. I'm Go Local News editor Kate Nagel. Thanks for tuning in for the Tuesday afternoon show. I'd like to welcome my next guest in, investment advisor John Kuczmarski. Thank you for joining us.
Thanks for having me, Kate.
With Efficient Capital Strategies. I'm glad you're able to come in here because every so often we like to get a temperature gauge of the markets, and it's been a little volatile as of late.
Certainly. October has been a unusual month for equities. It's been as of yesterday, markets were down around 9%. We had a pretty good rally today.
Okay.
So we're down around 7.7% month to date. So that's kind of an unusual month for stocks. So investors should be, a little fearful of what's going on, but we've had months like this before.
Okay, so don't get too skittish right away. But, we've seen such a run with the market. And you said, folks really, when taking into account factors, it's not just here in the country, it's really on the international stage.
Absolutely, absolutely. And what has kind of occurred in the last 40 days has just been a catch-up from what's been happening overseas.
Okay.
Overseas markets, emerging markets, the Chinese stock market have been under extreme pressure for a long time. And the U.S. has just kind of been an aberration, has been, kind of detached from it, and what's happened overseas has kind of trickled down to our shores over the last 40 days.
Did you anticipate this? I mean, as you talk about this past month, but did folks see this downturn coming, or did it take folks by surprise?
I would say it should take most folks by surprise. On the week of September 17th, the S&P 500 and the Dow made an all-time record closing high. We made a move around 10%, depending on the index, roughly from that level. It's certainly nothing abnormal for the market, but the real question is for investors is what is next. Not to have a big mystery here. But, that's really what's going on. Do we recover? Does the global, economy recover from what's going on? And, or do we continue? It's a good question.
Well, obviously, a lot of uncertainty, especially here in the country leading up to the election. Now, we have talked with some folks who thought maybe it was built into the market, but this past month, we did see some volatility. Let's talk past the election, but let's just, I don't want to bring politics into it too much, but a lot of folks, especially supporters of this current administration, are saying it's President Donald Trump responsible for the success of the market. Let's talk about the strength of the U.S. dollar.
Yes, as you can see, Donald Trump has not been shy about Donald Market. Yes, he has not been shy about discussing the stock market with voters. So, it's really a global event, and he is connected into what's happening globally. I think investment analysts are perturbed what was occurring with our relationship with China and some of our other trade partners. That has definitely not helped the situation what's going on, and I believe that there's a lot of uncertainty going into 2019, and I think that's why the markets have repriced. And I think that's really what's going on in the markets, is that they're looking past what's happened this year and focusing on next year.
And let's talk about, again, where things are at with the economy and what markets do and don't take into account. And one of the things that is talked about constantly is the debt level of this country. And obviously that's something on the fiscal side of things. So how does the market respond to that?
Yeah, absolutely. And I'm sorry for, I should have mentioned the U.S. dollar. The U.S. dollar has been rallying against other major currencies for the greater part of 6 months and making highs for the year. A lot of emerging market economies borrowed in dollars. So you're seeing emerging market economies down 20% plus this year. And it's really kind of dragged the U.S. down with it.
Okay.
Debt levels in the United States, it's very, we're at a budget deficit of about $1 trillion a year. We're at the point, I'm not really equipped to speak on that issue, but we're at a point where it's probably getting to be on the higher side of unsustainable.
Okay. And let's talk about those leadership stocks and their performances, the Facebooks, the Amazons, and where those are. We obviously saw what occurred with Facebook in the last several months, but even all of them, you're saying, are looking, they're all trending in the same direction.
Yeah, yes, they've been, it's been a wild ride in the NASDAQ 100, which is predominantly dominated by those stocks and the common acronym FANG, which is Facebook, Amazon, Apple, Netflix, Google. The mighty have fallen. They have been provided substantial leadership to the U.S. stock market, and a lot of these stocks are down 10, 20% from their highs, entering bear market territory. It certainly doesn't help when the leaders of this multi-year rally have sold off, and pretty substantially and pretty violently too. So investors should make their own decisions about those stocks.
Moving forward, and we talked about that, what each investor should consider based on their own needs, and that's really what it is, as you talked about, in terms of probably any investment advisor talking with their clients as they're in a little shock and awe right now as to what's taking place. But again, keeping that end game in mind, whether it's more immediate or more long term.
Yes, absolutely. And investors are going to get their statements in sometime next week, and it could be a little shocking, what's happened from the last time they received a statement. I would advise investors just to take a deep breath, stay calm. It's very psychologically intimidating when these things happen, and just kind of review what your long-term goals are. The market could continue to go lower, but I'm pretty confident that, a year or two from now, the U.S. economy will still be intact and growth will be underway. Here's the big caveat. It could get a little dicier before that happens.
Okay.
So investors should be ready to endure a little more volatility than usual. Investors have been spoiled over the last 10 years. Returns have been very high. Volatility has been very low. So, we're almost in the same spot we were last year with high volatility.
Okay.
So maybe we're entering a period of low returns and high volatility. Maybe we're not. Maybe last year was just abnormal, and we resume the current trend. But investors should be really, be very cognizant of what the risk is, but also be very cognizant of what they're investing for.
Okay.
Whether it be their retirement, their kids, their child's education, or just to live, or to grow their assets. So they should be very very aware of what the goal is, and obviously, and very acute that it could get very, it could get very shocking over the next 12 months. You
said that it could get a little more pain, but you're optimistic of a potential for a bounce back and not a sustained. We're not talking the big R.
Yes, and I think actually the next 12 months will be felt more by Wall Street than by Main Street.
Okay.
I believe there's a repricing of financial assets going on based on what's happening globally, and knock on wood, hopefully the U.S. economy will continue to just print GDP numbers over 2%. I'm pretty confident that we will, but financial assets have had a long run, as you have said, are trading at very high valuations, and not very high valuations, but higher than normal valuations. And investors should be aware of what the possible risk could be in the short term, but also focused on the long term, because the real growth for their accounts and for their is the long term.
Focus on that long game. Yep. Again, as we're having a very what's the correct word I'm looking for here right now with the market?
I think right now this would be called a correction because we are actually 10% off highs.
Okay.
20% off highs. It will enter what's known as a bear market, quote unquote, technical bear market.
Yep.
But we've had a long run in stocks. And I'm very confident about the future of the U.S. economy, even if we do hit a rough patch over the next 12 months, I think investors will be quite delighted by the end of the decade.
Okay, keeping an eye short-term and long-term on markets. John Kuczmarski with Efficient Capital Strategies. Thank you so much for coming in
Thanks,
today.
Kate.
I appreciate
Thanks for having
it.
me.
Don't go anywhere. We're going to be right back with our next guest here in the Navigate